What's going on, guys? So in this video, I wanted to kind of go over AMD and all the hype that has been brought back into the company ever since the company announced their 3rd gen Ryzen lineup, and also with their newest gen for the EPYC lineup and their new 5000 series Navi GPU line. AMD announced at Computex their entire new lineup for this coming year, and it blew everybody away. The amount of performance that they were getting over their previous generation Ryzen series was astronomical. For example, just the standard thread performance going from generation 2 to generation 3 was, according to AMD, was about 18% of an improvement, which shocked everybody. Everybody was expecting going into this that it was going to be about a 7% increase. Now, it should note, just as a reminder, that now MSI has kind of been, another manufacturers of these components have talked about, that they're only seeing about a 13% improvement, not that 18% that AMD talked about. But hey, companies like to, cherry pick their numbers across the board. So we won't really give AMD any flack on that. But the new lineup that is coming out is absolutely amazing. I will be personally picking up one of these components. I'll get into that in a little bit. But I wanted to go over this and exactly what does this mean for the company going forward, and then how does this, kind of impact the overall, semiconductor market in general right now. So if you guys are interested in that, make sure to stick around, hit that like button, hit the subscribe button if you want to see more of this content, and let's get right in the video. Now, taking a closer look at all these products that AMD just came out with, we can kind of see down here that there are, their whole new Ryzen suite from 5 to 9 pretty much introduced a more efficient and a better performing environment that no one was really expecting. It's the same socket type, so the majority of boards, depending on which CPU you pick from Gen 2, will be able to support it. However, that also will depend on manufacturer. But I know most of you, probably aren't building your computers with this stuff. So anyways, getting down into it, the speeds are modestly improved. Some of them are kind of flat, some of them are a little bit lower, but they have significantly lower power demand, which is great. And that also means that when you overclock it, it should really overclock to a much better performance metric than their previous generation. So net, if you include overclocking, all these CPUs are going to be producing at a much faster rate than their predecessors. This CPU right here is the one that I am actually probably going to be buying in a month when it comes out. I plan on upgrading my rig, and I plan on going either with the 2700X or the 3700X, really dependent on what the finalized third-party benchmarks are with these chips, because as we all know, never trust any semiconductor company's leaks, let's say, at face value. All of their benchmarks are very cherry-picked, and they could range anywhere from 5% give or take all the way up to when Intel did it, up to 30% give or take on what the actual metrics are. So definitely this is the CPU I'm keeping an eye out, the one I'll probably be going with. If you guys want, let me know and I can make a video of me building my entire PC if you guys are interested in that. But that's not really an investment topic, so I will kind of digress from that. But the new flagship series across the board is impressing all enthusiasts and investors alike. And a lot of people are thinking AMD is going to take a massive amount of market share away from Intel, also due to the fact that Intel has again kind of delayed their entire Ice Lake CPU lineup. They are releasing their 10 nanometer node for laptops and then smaller, notebook type things, like already made solutions. And their CPUs will be coming out, I believe, at the end of this year, but their server grade CPUs will not be coming out until early 2020. So, as we all know, if we've been following around with these two companies, this generally means that type of storm has been benefiting AMD over the past 2 years. So we'll see if that continues. However, I am not too keen on the way that investors are really thinking about the performance right now. And trying to get into that. And I know that a lot of you guys that follow my channel are invested in AMD. And so I know you guys are going to kind of give me some flack, but I do not see a good ending for what is going on right now. Now, this model is still getting tweaked around. I need to make it look a little bit nicer, but its functionality is perfectly fine right now. And right now, I am assessing AMD in terms of a long-term investment play. And for people that, they believe in AMD and they want AMD to succeed in the future over, say, the next 5-10 years, this is the type of valuation you will want to be using. If you guys checked out my last video when I talked about the different ways that people in finance kind of value companies, or they attempt to value a company. A lot of it has to do with what type of cash flow is being brought back into the company, or you can take a trader's approach and just, what is the company trading for in retrospect to its peers. Those are essentially the two different camps that you have when you go to a value company. And so AMD, I am going to be valuing right now because AMD, as we all know, is grossly, disproportionately overvalued compared to its peers. However, if the amount of cash flow that we can expect out of AMD over the next 5-10 years will kind of, make up for that with the amount of growth they're going through, I am totally fine with paying a premium if that happens. So that's what I'm taking a look at right now. So for, without having to get too far into this, this is essentially a financial version of the statements that are given in a 10K. So I take all of the, accounting numbers that are very manipulated, that are done from the majority of public companies, and I turn them into finance-friendly terms, through combining and subtracting a bunch of stuff that is just kind of on those statements. And I can do an entire video on, gutting 10Ks and 10Qs and putting them into finance-friendly terms that kind of weed out a lot of the BS that companies try to sell you. Because a lot of companies do a lot of, let's say, legal but very gray area definitions when they start to really discount things and expense things and throw everything on their statements. So in my opinion, this is a more accurate way to view a company and what actually is going on with the company. So as of right now, if we take, AMD and we say that their costs are going to be roughly the same as they have been in 2018, which was, in the past 5 years was the lowest amount of cost that they ever had. So their profitability last year was the highest it's been in the past 5 years. And I'm going to say that, okay, that's going to continue. And, I'm going to come down here to my growth estimates. And I'm going to say that the company, using its WACC as a discount, I'm going to say, this is a special WACC, but again, that's a thing for a different video. Using the discount rate of 9% of what I expect from AMD due to the cyclical nature and, the volatility that is with AMD, I'm going to anticipate that, based off of the growth rate that AMD has experienced in recent years, I think that AMD is going to be able to grow anywhere from 6% to 25% in the next 4 years, and then tapering down to anywhere from 2 to 3.5% in perpetuity over the long term. So all that means is that I think AMD is going to grow really fast for the next couple of years, or not so fast, and then it's going to grow at a constant rate indefinitely. And I think that between 2 and 3.5% for a semiconductor company is reasonable to expect out of growth. They have, these companies are near monopolies or duopolies. They can essentially price power their way to gaining, a 2 to 3% growth rate a year, in my opinion. So what exactly does that mean for the stock price right now? Now, so the interesting kicker is that you can kind of use these models to reflect what is the actual value of the stock price, using these models, and then what is the actual stock price. So this is like the, in a textbook type of format, the stock should be trading between $4.28 and $8.87. Now, obviously, at the stock price of $28.03, something doesn't add up. And that is what I kind of wanted to show you guys in this, is that I'm not saying that AMD is the most overvalued stock in the world right now. I'm not saying that AMD is currently, 343% overvalued compared to what I think it should be worth. What I'm saying is that investors are taking a very, let's say, optimistic approach when valuing this. Because what happens to all these numbers when I take a company like Intel, and I see Intel's cost, if you remember, I go up to AMD and I gave them a 93% cost rate. If I go to Intel, a more robust, more refined company that kind of has the, their crap together, and their costs have been ballpark 70 to 73% of their revenue. And so that makes them much more profitable per unit sold. If I apply that to AMD, so I think that AMD is going to, during their growth period, they're going to get things straightened out and they're going to really become more profitable as their other players, such as NVIDIA, Intel, Micron, all that stuff. If they become as profitable as them, some crazy stuff happens with the stock price. So if I bring it down to 73, you then have very more ballparky numbers as to what the actual stock price is. And these growth rates, I think, are pretty standard. This WACC is very discounted compared to what it should be. The actual calculated weighted average cost of capital for AMD due to the volatility in the stock. Should be 25%, but I think that that's a little BS. So I gave it 9, which just is a not extremely, speculative play, but it's a more risky play than the overall market. So, using that discount and then looking at their average compound annual growth rates over the past couple of years, more weighting towards the recent year because, the whole Ryzen lineup has been really the thing that's revamped the company. So, anywhere between 17 and 20% I think is fair. And then anything above 20% is, extremely bullish on the company, whether that's right or wrong. And then I think anything on the lower half of it is, relatively pessimistic. And then you have a much more, accurate range of valuations for the company. So, we see right here that, using these okay growth terms, that I personally think are fair and the most reasonable for the company, you get a current stock price value of $31.93. So that is roughly a 14% gain from today's current stock price. However, the big thing that you need to keep in mind is that this is assuming AMD becomes more profitable in the future than they've ever have been. Now, I know a lot of people talk about, market share and that they're going to be taking market share away from Intel, and I get that, and I do believe that that is a smart strategy for AMD. However, the actual amount of cash that is going to yield current investors, discounting it back to real term value, not just a jackpot, in 10 years from now, the actual amount of money that AMD will be worth to investors right now, like if you expect that 15 to 60% gain right now in the stock price, in real thing, not just paper like trading. I'm talking about people that look at AMD as a company. They love what Lisa Su's going in and they want to be invested long term. These are the types of returns that you're going to be looking at. And in my opinion, the company needing to slash costs, roughly 20% and maintain their extremely fast growth to be valued, only 10%, 15%, 20% above what the current stock price is a really tall order. Now, I am not saying that the stock price will not do whatever it wants, in the short term. The stock price could go anywhere to $50 to $10 a share, within the next 6 months. And I don't think anybody would be too surprised that that happened to AMD. But this is just kind of what I wanted to show you guys that are long-term investors, or, even if you're, like long-term traders, people that take positions over like 1 to a couple years, and you just think that there's a really green light in the future for AMD, I would definitely reconsider, going all in currently. I do definitely think, even if we want to tweak these numbers more, and make it, 20% and 30%, you can get up to 36% of a return on your investment, let's say, only if AMD is able to really, kind of bring down their costs exponentially. Because again, if I go back to here and I make their costs be the same that they were in 2018, it's just still like you essentially aren't paying for that right now. You're paying for the company to grow really quickly and drop costs, not just grow really quickly. And I think that is the biggest misconception in the stock market right now, is that everybody thinks that if AMD is able to take, say, 20 extra % of Intel's market share, that they're going to be valued at, $50 a share. But that's not just the case. They can sell a lot of products, but if they're not making any money on those products, then they're still not worth a lot of money. Like you can spend more money and then burn more money. You can look at Tesla, hey. But, you really need the cost and the profitability to kind of compensate what's going on with your expected growth targets. So that is something I just wanted to talk about. And there are a couple of really interesting articles here that are done by people, especially Professor Ma. Highly recommend following this guy on Seeking Alpha. He is a professor, he's got his PhD and a CFA, all that stuff. But he, follows and comments on AMD a lot, and he has been fairly accurate. So as you guys know, that I've been covering AMD for, a couple of years now. I have seen the ways that he attempts to value AMD and the ways that I attempt to value AMD are not exactly the same, but he much kind of tracks, his price targets track what the market expects a lot more accurately than mine do. Now, obviously, that allowed me to buy in way down when the stock price was below $11 a share. But, his valuations also allowed him to hold on to the stock for, a much longer period of time with him giving it a buy rating. So, I would highly recommend that. I'll link to it in the comment section down below. But that's just kind of the stuff I wanted to go over in this video. And I also kind of wanted to tease this new model and show you guys exactly kind of how I'm looking at companies right now and how I plan on valuing them. Because everything is just, you know, what type of number are you betting on in the future is essentially what investing comes down to. So that's kind of it for the video. I know it was a little bit all over the place, and I'm sorry for that. I'm just still trying to get in the swing of things again, you know, taking pretty much 2 months off from college. From YouTube before college. So, you know, bear with me for a little bit, but I will be trying to, you know, create as much content as I can for you guys. And make sure, if you guys stuck around at the end of the video, make sure to let me know in the comment section down below, what do you guys want me to produce content about? You know, that really helps me, and I hopefully it will also help you moving forward. And I just really want this channel's community to kind of pick back up to the way it was, you know, say 6 months ago. So, thank you guys again for watching, and I will catch you in the next video. Peace.